All right, hello everybody. It's MDB here, Modified Darvas Box, coming at you with a hopefully a quick video here. It's late at night, but I'm pumped about the football games this weekend. San Francisco 49ers, woo! Um, but anyways, I haven't done a video in like 2 months, mainly because I put on a lot of risk in November, December, and I didn't really have a lot of time to concentrate on doing videos. No offense, but I don't get paid for this. So, but I wanted to do one here and just go over some things real quick in the market. For people who don't know who I am, I'm a guy. I read this book, How I Made 2 Million in the Stock Market, created a system based off of that. It's a great book. I suggest you check it out. Basically, I look for what's called bullish Darvas box patterns that look kind of like that, and I try and avoid or mostly avoid bearish Darvas box patterns that look like that. So check out that book. It's a really good one. I think you'll enjoy it. It's considered one of the classics. So let's look here at the indexes pretty quick here. Basically, we have just an awesome bull market. From its when it broke out of its Darvas box here in late October, it's been up about 12 weeks. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Yep, 12 weeks. 3 months of just straight up. It's freaking awesome, and it just shows what a big bull market that we're in. I was calling for this because I saw it on the growth percentage rates. I just thought this would happen. I put it on Twitter, and knock on wood, so far so good. S&P 500 is the same way. Came out of its Darvas box in late October, beginning November. This one's been up actually 11 weeks as I count, but another great run there. So just goes to show people with 401ks are loving it. One thing that's interesting though is the Russell 2000. Russell 2000, it lingered. It didn't really want to come out and join the party, but then it eventually did. But here in December, it said, "Nah, man, I'm still not sure." And look, lo and behold, it's formed a new Darvas box. So that's really kind of interesting. I've been calling for actually indexes to go sideways. I think that's the healthiest. But for non-index stocks like small and mid caps to take up the slack and go up a bunch. Well, that's sort of happening, but not really. But that's what I'd like to see going forward here. But as you can see, the Russell 2000 is now in a brand new Darvas box. So now we watch the structure and we see whether it's going to break up out of it, which is bullish, or if it's going to break downwards from it, which would be bearish. So that's a good way of keeping track of things as to what's going on. One thing in the index's favor is, at least the big caps, is Apple. Okay, Apple's been going up since call it September. You could even go back further back here to June, and for purists, you could go back here even to February. But Apple Computer is just on a tear. Look at this run. I mean, just printing money left and right. All you had to do is buy it once, and you've made a bunch. But Apple is now so big that basically the indexes, the big indexes, aren't going down unless Apple goes down. If Apple stays sideways or goes up, the indexes are probably going to stay sideways or go up. Apple Computer is becoming so big, it is the market. It's really amazing. But keep an eye on Apple. That's a real litmus test as to the health of the market, and definitely a good one to watch. One index that was hot, that's cooled off here and formed another Darvas box like the Russell 2000, is biotechnology. Man, when biotechnology gets hot, it gets red hot. But the problem is, when is it going to get hot, and then what do you buy when it gets hot? No offense, I don't have a clue. Biotech is so out of my wheelhouse, but I do know people who are good at it, and so I try to at least track some of their ideas. But biotech here is in a brand new Darvas box, and its sister ETF, the XBI, also showing the same thing. So based on this structure, we keep an eye on it and we see if it's going to break bullish or bearish. I don't know yet, but we'll see what happens. Um, some stocks that I think have been running and need to cool off. There's a few of these which have just been monster winners, and everybody knows about them now. AMD is one. I was selling some AMD up here this past week, right here in this 48 range. AMD's been running along with the Nasdaq, but you know what? It's approaching this $50 level. It came sort of close here. In my opinion, I think AMD needs an earnings report to show whether it's justified and will go up higher, or whether it needs to go sideways, or wherever it's going to go. But I think it's probably not going to go a lot further until the market gets more data from their earnings report. Another one which we all know and love now, Tesla. Tesla has been a huge monster winner, but it's been going up ever since here in October. But here's the deal on Tesla: big green volume to launch the stock, big green volume to get it going, and now this past week, gigantic big green volume. To me, that's a contraindicator, because you know what? It's gone from what, 258 to 478. At this point, if people now are buying huge, they've missed the run. Where have they been all this whole time? So probably that's chasers who cracked under the pressure, and big mutual fund managers, hedge fund managers, they crack under the pressure too. They're probably getting yelled at that they didn't buy Tesla earlier. So what do? They hit the buy button and they say, "Get me in, get me in, get me in, get me in." Well, to me, that's a contrary indicator, which means it's time to take some profits off the table, because of the one principle of supply and demand. If everyone's in, who's left to buy? So think of it in terms of supply and demand. Demand is off the charts, but what if they run out of demand? So I think it's a prudent time to take some profits of Tesla. Maybe it goes sideways, maybe it goes higher in the future. I don't know, but all you can do is just play in the moment and see what happens. Another one that's gotten really hot, LK. Huge breakout here, big volume in mid-November. I was a buyer here at like 21 and a half, right after they did earnings. It's gone up, 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 up. This past week, huge green volume. All the chasers pounded their way in. Think of any big institutions that didn't buy LK here. Well, they got long here. The problem is they're late. So when they're late, that means there may not be enough demand coming after them to push the stock higher. So I also was a seller of LK this past the past couple of days. Trimmed some of my position, and we'll see what happens. But I think those are three that need to cool off. But that doesn't mean that everything needs to cool off. There's stuff that's beginning to launch, like CYBR. Look at that. Formed a Darvas box, and then boom, comes out on big green volume. And by the way, you know what? This is what I call a textbook Darvas box breakout, because it breaks out of the box on big green volume. To the left here, you can see this is my textbook Darvas box breakout list. And you can see it's just got a ton of names on it. And they've all done this textbook breakout formation. AMD did it, and all these other ones have done it too. So I track these because it's a good probability. It's not a guarantee, but it means to me that there's a good probability the stock may go higher. CYBR was one of them. DXCM is another one. Look at this formation here. Breaks out on volume. Now the volume's not huge by any means. Like it doesn't resemble this back in November, but it's above average, so it meets the criteria. What's another one off the list here that looks good? Oh, Qualcomm. Qualcomm had a breakout here. This actually here is its second chance. It tried it once in November. It failed. It went up, but look at all the red volume that followed it. Well, now it's getting a second chance. Maybe this one sticks for it. Facebook is one. Had the breakout here, and now look, 1, 2, 3 weeks later, it's beginning to accelerate. Here's another MDB. I love tracking MDB stock for obvious reasons. Darvas box breakout here, big green volume. It broke out of the box back in mid-November, but yeah, where's the green volume? I did not buy that. Then it came down on big red volume, had its earnings, or that's what the green arrow is, earnings report. But looks like it's recovered, and now the market has figured out they want it. Buyers have shown up. Now to me it's buyable, whereas this prior one was not. So I like MDB. Here's one which, who the heck is buying Uber? But you know what? Look at Uber. Formed a box. This past week it broke out of the box. Amazing that Uber is being left for dead down here in the 26s. Now it's at 34. That's something. I love the market when it does that. It's amazing. Last one I want to show with a powerful Darvas box breakout is wicks. Wicks, look at that. Makes the formation, boom, breaks out. Now I don't own wicks, but I track it, and yeah, that's really positive. I mean, I'm kicking myself. 3 weeks ago, I thought wicks was going to go downwards and go down to like 85 or something. Wrong. So wicks looking good. It's gotten buyers come back in. So the last one, which just reflects a bull market, is Beyond Meat. Look at that, up $20 this last week. It has not formed a Darvas box structure, but it just reflects a bull market. So congrats to anybody who bought Beyond Meat. We'll see what happens on that in the future. But anyways, I feel it's a bull market. So I hope you guys have a good week, and hope everyone makes some money. Talk to you soon. Bye.